on account of the listing is Swiggy. You have to, give it to the pricing of the company at a steep discount to Zomato. The street thought that maybe, because of the tepid listing and the tepid, subscription and the market scenario itself, there could be a bit of a discount, but no. Right. What this stock has done is it's opened in the green, and from there on itself, because of its lack of subscription, there is a case for, FOMO, and a lot of investors now perhaps getting in. The gap between Zomato and Swiggy right now is at around 55% when it comes to the market cap itself. So that's something we will most definitely closely monitor. Given the metrics, obviously Swiggy has to trade at a discount to Zomato, but at what is the discount is something that, we'll always keep watching out for as the water finds its own level. Most important part, the investors who are making money on Swiggy right now, one of them is Accel. Accel started accumulating Swiggy shares from 2015 itself, and their weighted average acquisition price is close to around 11.17 rupees per share. In the IPO, the offer for sale, they offloaded about 1.05 crore shares at a price of 390, which was the issue price itself, sitting on a fair amount of gains. The question again, when it comes to growth expectations from Swiggy, what, as per them is the fair value and the discount that it should be trading at versus Zomato. We have the man himself, Anand Daniel, partner at Accel, joins us now. Just to give you a perspective, they sold about 1.05 crore shares, which is about 0.5% equity. But as per their current shareholding, they still have about 5.5% stake in the company. Anand, congratulations on this stellar investment for you and a great exit for just a little bit of the overall holdings that you have in Swiggy as well. Over 30 times the gains that you've made. Just wanted to understand, what as per you should be the fair value of Swiggy as compared to Zomato when it comes to a discount, and what do you do with the remaining 5.58% stake? How long do you intend to hold it for?
Hi, thanks for having me. It's been a real pleasure. So we started investing, as you pointed out, in Swiggy in 2015. Our initial investment was at a $6 million post. So from that, it's been an amazing journey. To your question, I think in India, Harsha talked about it, is at a very early stage of evolution when it comes to food and retail and commerce. So it's a fundamentally very strong company. So we are excited about what has happened in the last decade, and we believe that it's a very strong company and will continue to grow and scale. No,
there's no denying that it is a strong company. The question is, how much is in the price already when it comes to its other listed peer? Because now you have a comparable, right? And you have comparable metrics as well for both the food delivery and the quick commerce space. What, according to you, is should be the fair discount to the other listed player? And at the same time, if you could give us a sense of what the challenges in growth for Swiggy would be from here on.
Got it. I think the discount is the market's going to decide that, right? So it's already thinking through that and working through that. And as we look forward to your question on what are the challenges, I think it's a very operationally intense business, as you can imagine, being in hundreds of cities. Anything can change in a moment's notice across this. So keeping the ship running as a tight journey, they've done a good job. But Swiggy needs to continue doing that, and Harsha and the management team are very well placed to do that going forward as well.
Good afternoon, Anand. Thank you so much for joining us. First up, the key question is you've offloaded a very tiny part of the stake. You still hold well over 5%. So number one, do you continue to hold on to that, or will you be looking to offload that at regular intervals? Do you have a path over there? And secondly, one of the reasons why the IPO was not subscribed as much as other IPOs that we saw during the course of the year was the fact that investors are still worried about the actual path to profitability. So what is your take over there? When do you see especially companies like Swiggy actually turning bottom line profitable?
I think Swiggy has given the guidance themselves. They've been working towards it on a steady pace, right? So on the path to profitability, and I think they have a very well thought through plan there. What was the other question? Sorry, I missed the first question.
What do you do with your remainder of the stake? You have close to 5.5% stake there.
Oh yeah, that's right. So we are pretty excited. We've got, as you pointed out, reasonable liquidity. and I think the prospects of the company are very good. And as you know, there's a lockup period, but overall we are very excited about the prospects of the company, and as of now the plan is to hold.
All right, as of now the plan is to hold, but it's also limited by the life of your fund, right? When does that end? If you could give us a rough timeline.
Yeah, the funds are roughly 10 to 13 years, and there's no hard deadline by this time you have to close or anything like that. So for good companies, we tend to hold on. For example, Flipkart initial investment was 2008, and we exited that completely only very recently. So it was more than 15 years that we had.
All right, two-part question, both of them related. One, what is your growth expectation from Swiggy from here on? Street is expecting the industry to grow anywhere between 32 to 35%, and in a market where it is almost a duopoly with some more share for Zomato than Swiggy, what do you think is Swiggy's right to win here? And do both players in the industry grow at the same rate?
Yeah, so there's food and there's retail, grocery, and broader retail. On the food side, as we all know, it's stabilized and growing at a reasonable pace there. And if you look at retail overall, of the 700 billion plus, India is still very early in the online penetration, and particularly quick commerce is even earlier. And it's about each company executing against its plan and growing. And the market is so large. Harsha has talked about it to the media as well. It's more how do consumers come more and more online, realize, taste the quick commerce experience, and then order more. So growth potential is much higher on the retail side.
Okay, thank you so much, Daniel, for joining us, and congratulations on what's been a very successful investment for you. But moving on, let's slip into a short break. Up next, we will be joined by Navin Killa, the head of APAC Telecommunications at UBS Securities, to discuss trends in the telecom industry. Stay tuned.